Hello everyone, welcome back to my YouTube channel. Today I am going to discuss on the definitions of the important terms to be used under the Income Tax Act. Let me go for discussion for the definitions of important terms is to be used. The first one, the person. Under section 2 subsection 31, the term person means an individual, an HUF, a firm, an AOP, that is Association of Persons, or body of individual, company, local authority, or artificial juridical persons. Here, an individual means a natural person or a human being. An individual may be man or woman. Even lunatics are also considered as a person in Income Tax Act 1961. Then a HUF, that is Hindu Undivided Family. It is a joint Hindu family consisting of common ancestral property and having co-personary interest. Here HUF is a joint Hindu family consisting of common ancestral property and having co-personary interest. That should be called as HUF. Then a firm. It may be the partnership firm. A firm is nothing but partnership firm, which is defined as per Indian Partnership Act. You know very well, a firm is group of person who is agreed to carry on business by all or any of them acting for all. That should be called as the partner. That's why here the partner a firm is nothing but the partnership firm, and a firm is a group of person who is agreed to carry on business by all or any of them acting for all. Then an AOP is nothing but association of persons or body of individuals. It is whether incorporated or not, whether it may be registered or not. It is a group of persons who carry on some common business and share the profit or loss arising out of it. It means that here some of the persons is to be carry some business, some common business, and share the profit. Whatever the profit is to be earned, that should be distributed among the persons. Either it may be profit or loss, which is to be arising from the business. That should be called as association of persons or body of individuals. Then the next one is there the company. You know very well the company is nothing but joint stock company, whether it may be foreign company or the Indian company. A company is nothing but joint stock company. It includes both Indian and the foreign companies. Then local authorities. They are also called as the local government. For example, Gram Panchayat, Taluka Panchayat, Pattan Panchayat, Jilla Panchayat, municipal corporations, etc. is to be considered as the local authority. And here, artificial juridical persons. It is the miscellaneous head which includes all the remaining persons except the above persons, above the members, the remaining heads used to be considered as artificial juridical persons. For example, temples, idol, then deity, etc. Here, whenever you are defining a person under the Income Tax Act, you have to consider the all the points. The person may be individual, a person may be Hindu undivided family, a person may be partnership for a person may be an association of persons or body of individual, a person may be a company, a person may be local authorities, a person may be artificial juridical the persons. They should be called as the person under section 2 subsection 31. Then the next one is there assessee. This one is very important term here. Assessee, section 2, subsection 7. An assessee is a person who is required to pay the tax. A person who is paying the tax to the government, that person is to be called as an assessee. Or some cases, he is to be paid the interest or penalty under the Income Tax Act. Any person who is paying the tax, interest, or penalty to the government as per the Income Tax Act 1961, that person is to be called as assessee. And also include a person on whom any proceeding under the act has been taken for the assessment of income or loss or the amount of refund due to him or other persons. Here, any person on whom any proceedings under the act has been taken for the assessment of income or loss or of the amount of refund due to him or other persons. For example, legal representative of deceased persons. Here, if you are acting as the legal representative of a particular deceased person, then you should be considered as an assessee. Then a person who is deemed to be an assessee, best example is to be guardian of a, if a particular person is to be minor, if you are the guardian of that minor, you will become, or you should be considered as an assessee. Suppose here any person who is to be considered as minor, and you are the guardian of that person, then you will become an assessee as per Income Tax Act. Then a person who is deemed to be in default, a person who is responsible to deduct the tax at sources. If the person is to be responsible for TDS fails either to deduct the same or after deducting the tax fails to pay it to the government. Suppose here you are responsible to deduct the tax at source. If you fail either to deduct or after deducting, if you fail to pay that TDS to the government, that person should be called as an assessee as per section 2 subsection 7. This is the meaning of an assessee. Next, assessment year. What is that assessment year? Assessment means assessment year. It is a period of 12 months commencing on 1st April every year. Definitely, here the accounting year is to be start or the financial year is to be start with the 1st April and end with the 31st March of the next year. Here, a period of 12 months commencing on 1st April. Assessment year as per section 2 subsection 9, a period of 12 months commencing on 1st April every year and ending on 31st March of the next year, that should be called as assessment year. And here assessment year is the year in which the income of previous year is assessed to the tax. Suppose here, if a person is to earn a income of rupees 10 lakh and you are assessing the tax during the 2019-20, then assessment year is to be 2021. Assessment, that's why here assessment year is the year in which the income of previous year is assessed to tax. That's why here during the 2019 and 20, if a person is to be earn a income of rupees 10 lakh and you have to assess the tax, the assessment year of the 2019-20 is to be 2021. 2020 2021 ಆಗುತ್ತೆ. That assessment year is the financial year immediately succeeding to the previous year. See here. Assessment year ಯಾವುದು ಅಂದರೆ ಇಟ್ ಈಸ್ ದಿ ಫೈನಾನ್ಷಿಯಲ್. ಡೆಫಿನೆಟ್ಲಿ ಇಟ್ ಶುಡ್ ಬಿ ಸ್ಟಾರ್ಟ್ ಫ್ರಮ್ 1st April to 31st March. ಇಮಿಡಿಯೇಟ್ಲಿ ಸಕ್ಸೀಡಿಂಗ್ ಅಂದರೆ ಪ್ರೀವಿಯಸ್ ಇಯರ್ ನಂತರ ಯಾವ ವರ್ಷ ಬರ್ತದೆ ಆ ವರ್ಷಕ್ಕೆ ನಾವೇನಂತ ಕರಿತೀವಿ, ಅಸೆಸ್ಮೆಂಟ್ ಇಯರ್ ಅಂತ ಕರಿತೀವಿ. ಅದೇ ಹೇಳಿದೆ ನಿಮಗೆ, ಯಾವುದೇ ಒಂದು ಈಗ ಫಾರ್ ಎಕ್ಸಾಂಪಲ್ 2019-20 ನಾವು ಪ್ರೀವಿಯಸ್ ಇಯರ್ ಕನ್ಸಿಡರ್ ಮಾಡಿದಾಗ ಅಸೆಸ್ಮೆಂಟ್ ಇಯರ್ ಯಾವ್ದಾಗುತ್ತೆ, ಈಗ 2020-21 ಆಗುತ್ತೆ. ದಟ್ ಶುಡ್ ಬಿ ದ assessment year as per section 2 subsection 9. And here the next one is there, the definition of the next concept, that is the previous year. It is the opposite to the assessment year. It is also previous year, it is a period of 12 months which is always begin from 1st April every year and end with the 31st March next year. And here it is the income earned during the previous year which is to be assessed to tax in the assessment year. Suppose here it is the income earned during the previous year. Suppose any person who is earned a income of rupees 10 lakh during the 2018-19 ಆ ವ್ಯಕ್ತಿಯ 10 ಲಕ್ಷ ರೂಪಾಯಿ ಏನೋ ಆದಾಯ ಮಾಡಿದಾನ. ಆಮೇಲೆ ಅದ್ರ ಟ್ಯಾಕ್ಸನ್ನು ನಾವು ಯಾವ ಇಯರ್ ಅಸೆಸ್ಮೆಂಟಲ್ಲಿ ಮಾಡ್ತೀವಿ, 1920 2019-20 2018-19 10 ಲ್ಯಾಕ್ ರುಪೀಸ್ ಇನ್ಕಮ್ ಜನ್ರೇಟ್ ಅದ. ಅದರ ಟ್ಯಾಕ್ಸ್ ಅಸೆಸ್ಮೆಂಟ್ ಯಾವಾಗ ಮಾಡ್ತೀವಿ, 1920. ಅದಕ್ಕಾಗಿ ಪ್ರೀವಿಯಸ್ ಇಯರ್ ಅಂದರೆ ಯಾವುದು, ಯಾವ ವರ್ಷ ನೀವು ಇನ್ಕಮ್ ಜನ್ರೇಟ್ ಆಗುತ್ತೆ, ಅರ್ನ್ ಆಗಿರ್ತೀರಿ, ಆಮೇಲೆ ಟ್ಯಾಕ್ಸ್ ಲಯಬಿಲಿಟಿಯನ್ನು ನೀವು ಯಾವ ವರ್ಷ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಅಸೆಸ್ ಮಾಡ್ತಿರ್ತೀರಲ್ಲ ಅದಕ್ಕಿಂತ ಮುಂಚಿನ ಯಾವುದು ವರ್ಷ ಇರುತ್ತೆ ಅದಕ್ಕೆ ನಾವೇನಂತ ಕರಿತೀವಿ, ಪ್ರೀವಿಯಸ್ ಇಯರ್ ಅಂತ ಕರಿತೀವಿ. ಇಟ್ ಈಸ್ ದ ಇನ್ಕಮ್ ಅರ್ನ್ ಡ್ಯೂರಿಂಗ್ ದಿ ಪ್ರೀವಿಯಸ್ ಇಯರ್ ವಿಚ್ ಈಸ್ ಟು ಬಿ ಅಸೆಸ್ಡ್ to tax in the assessment year. And here previous year is a period of 12 months which always begin on 1st April and ends on 31st March of the next calendar year immediately preceding the assessment year. Here some of the exceptions to general rule. First one, the person leaving India. ಕೆಲವೊಂದು ಎಕ್ಸೆಪ್ಷನ್ ಕೇಸಸ್ ಅದ, ಎಕ್ಸೆಪ್ಷನ್ ಜನರಲ್ ರೂಲ್ಸ್ ಅದ. ಯಾವುದು ಅಂದರೆ ದ ಜನರಲ್ ಪ್ರಿನ್ಸಿಪಲ್ ಈಸ್ ಇನ್ಕಮ್ಸ್ earned in previous year are taxed in the assessment year. Normally, as per the general principles, the income earned in the previous year are taxed in the assessment year. In the following situations, some of the income of previous year is taxed in the same previous year itself. In some cases here, some of the income which is to be earned in the previous year, in the same year we have to assess the tax. What are those here? First one, income from shipping business of non-resident ship owner. The ship owner is to be NRI, non-resident of India, and whatever the income is to be there from shipping business, it should be assessed during the same year only. Then person leaving India, any person who is to be leaving India, leave, L-E-A-V-I-N-G, that is the leaving in India. Next, bodies established for a particular purpose. Any different bodies is to be formed for a particular event or purpose. Next, person likely to transfer property to avoid the tax. To avoid the tax, if any person wants to transfer their property, the intention is to avoid the income tax. and discontinued business. If suppose here any person wants to discontinue his profession or business, in these kind of situations, the the tax is to be assessed during the year only. That should be called as the previous year. These are the some of the definitions. The rest of the things I will come with in next video. Here there are some definitions, that is the person, assessee, assessment, and previous year. I hope all of you got the definition for these four important terms which is to be used under the Income Tax Act 1961. Thank you all.